Hi, tonight we're back with hard money lender Beau Eckstein. Hi, Beau.
Hi, Bill.
Hey, just to get us started, how did you get your start in real estate?
I got started in real estate as actually a telemarketer for a mortgage company. A friend of mine was originating loans, and they needed some help in the marketing department. So I basically got hired on, and my job was to call on leads and then fill out a lead sheet. Ask them pre-qualifying questions. Do you need to refinance your house? What's your rate on your first? What's your interest rate on your second? And then figure out if we can consolidate debt and all that kind of good stuff. I did
Okay.
that for about 3 or 4 months, and I realized that I could get my real estate license, and that's exactly what I did.
Okay. So how did you make the transition from that, from like a licensed real estate agent to a private money lender? That seems like a big jump, or were there things in between that you did to make the transition a little bit easier?
So once I got my real estate license, I was still originating loans. You need your California real estate license to originate loans, unless you work for a bank. But I was working as a broker, and during that time, I used to originate conventional loans. But I also started to get into originating hard money or private money loans. So I got to know a lot of the investors that were funding these type transactions. And from there, as recently as about 4 years ago, I've kind of devoted myself to just arranging private money funding completely. But I started back 15 years ago, actually originating private money loans. But until about 4 years ago, I wasn't full time with that. It wasn't my main focus.
Okay. So what was your main focus from that point to now, or to 4 years ago?
So I was selling real estate and originating conventional loans pretty much most of my career.
Okay.
That kind of taught me the fundamentals of real estate. Obviously, I was buying property myself too, but I was buying and just kind of holding. Actually, I was buying and speculating that prices were going to go up before the crash. So, wasn't doing the smartest things back then, but that kind of gave me the basic understanding of the basic principles of real estate.
Okay. So so you're pretty well known as a house flipper, from your stint on HGTV's Flip It to Win It show. Did you get into house flipping once you became a hard money lender?
Yeah, so basically, I did. I started arranging the financing, and it taught me the fundamentals of what these investors are doing and how they're structuring deals, and it actually gave me the confidence to, well, if I can analyze a deal, I can do it myself. Even though I didn't have a construction background, it's kind of baby steps because, yeah, you can say I can buy it for this price and sell it for this price, but you also need the piece in the middle, which is understanding the whole construction process, which a lot of people don't realize what they're getting into, and so learning the basic principles of construction management is key too. So um, getting involved in all that was very important, and it gave me the good background to start house flipping.
Do you have any in closing? Do you have any you know top tips for somebody who's trying to break into house flipping and manage a construction project and whatnot? Is there any, like, one thing that kind of trips everybody up?
Um, well, you got to be realistic, and you got to know how to find the deals. You got to know how to manage a realistic construction budget, and then you also have to be realistic with the sales price, what you're going to get for it. So if you're conservative on the numbers, that's always the safe way to go. So, for example, if the low range is $1 million that you're going to sell the price at, where maybe you can get 1,300,000, 1,200,000, I would factor your numbers off the low end, and this way, especially on the first couple deals, you're not going to get caught with surprises because usually you do. So, um, but renovating a property, whether it's a $100,000 budget or $300,000 budget, it's the same principles. It's all about getting in and really doing a very detailed scope of work and identifying all the items that you're going to put into your house. So this way, the communication between you and your contractor which is the critical part, is clear. And a lot of people, they'll just take a rough budget from what the contractor says, and then they'll blame the contractor, which it's not always the contractor's fault. It's got to be, as the investor, you have to know that you need to be really specific and set timelines and price points and draw schedules that are realistic.
Okay, great. As a final word, is there anything you want to say to wrap this up? For example, where do you think maybe the San Francisco real estate market is going in the next 3, 6 months, maybe a year out?
Well, sales in California, I just read, I think they're down about 5%. That could have been a nationwide statistic for the last month. So there's definitely a little bit of a slowdown. But at the same point, I keep on saying it, there's the lack of inventory. So if you price your house right and you design a house that is what a buyer wants for that neighborhood, it's going to sell. So if your house doesn't sell in the first 30 days, unless it's a super high-end house, then you're probably not priced right, or you didn't put the right level of finishes in the house. So that's my suggestion. And also a big mistake people do is that they're emotionally attached to the property, and they'll price the property at the high end when really sometimes it's better to price a little bit under the market and have multiple buyers bidding on the property. So all that there's a lot of moving pieces, and getting it just right can make the difference of getting $50,000, $60,000, $70,000 more on your offer by playing the game the correct way.
Okay, great. Thanks a lot for your time tonight, and we'll talk to you next time.
All right, thank you.